Morning, Stocktwits Nation. I hope everyone likes the new music. It's very Studio 54. Our friend Michael Parekh's back, and of course, Shay Boloor is here. We have a packed show. Guys, how's it go? First of all, Michael, I noticed you were bopping around. Is that your style of music?
That music, I mean, you said Studio 54, so that starts to date me. No, exactly. And then I want that for my mixtape. That's good workout music,
I know. But yeah, the gym, just like, cranking some weights, listening to Shay. How do you like the new song?
No, I love it. I'm craving a Negroni on a rooftop somewhere right now.
Yeah, it's kind of like Mykonos vibe.
I love it. Yeah, 100% Scorpion.
It's good. Well, welcome back to the show, everybody. Michael's here. We got a lot to cover. If you guys watched a couple weeks ago, maybe was it last week? I had a fascinating conversation with him. The CEO of IonQ is stopping by to share some news. But first, Shay, you made an announcement yesterday. Tell us about what's going on in your world.
Yeah, I mean, honestly, before I even talk about it, how about we just roll the tape, Keith? Today's a big one. I'm officially joining the Futurum Group to launch Futurum Equities alongside the man, the myth, the MBA, Daniel Newman. Look, retail investors are sharper than ever, but the research world still built like it's 2005, and we're here to change that.
Yeah, that's exactly what we've been doing for the past 7 years since we started Futurum. We've been advising the world's largest tech companies and their CEOs. We've been helping them navigate disruption, innovation, digital transformation, and now what we're going to do here is we're going to extend that same level of analysis to the retail investing world, giving them clarity, discipline, and conviction, the insights needed to build a world-class.
That's exactly why we're launching a full lineup of research products and subscription. But this isn't just content. This is capital intelligence. And in a market moving faster than models can keep up, air is how you breathe. Access, insights, research. That's the future. That's Futurum Equities. The days of retail just getting the leftovers, done. We're setting the table now.
That's exactly right, Shay. Welcome to Futurum Equities. Welcome to you. Welcome to everybody. Time to get to work.
All right, Shay, back in the lab.
Congratulations.
Back in the lab. I mean, yeah, this is exciting. This has been in the works for a couple weeks now. A lot of back end work on dialogue between Daniel and myself, and like what our vision was going to be for Futurum Equities. And I think the biggest reason why this is getting formed right now, in my opinion, is everyone treats institution as like the geniuses of the world, and retail is just dumb money. That's why you always hear smart money, dumb money. No, they're not smarter. I'm fully. First, I'll just look at Robinhood and Palantir. They've missed the boat on that. Like that's a perfect example of why institutions are catching up. But either way, a lot of people think these institutional investors win because they're smarter. No, I really do believe it's because they're closer to the actual data. They have access that the retail doesn't have, where they're in the rooms with the decision makers, like the CEOs, CTOs, CIOs, the people who are actually making the moves on where they're going to have these investments in the AI, what the infrastructure, where the next bottleneck is going to become. And then they front run it, and then retail just sees it in the earnings print, but by then it's usually too late. So I think there's been this kind of a massive institutional barrier for retail that I'm just like, why is that still the case? That's why I mentioned, like, it's like everyone's treating investing like it was 15 years ago when Robinhood broke those walls down through disrupting the brokerages. What's the other component of that calculus for retail investing? It's access. And I think that Daniel, through his connections in the tech world, and he has an institutional research firm already, the Futurum Group, he's willing to take that wall down to give retail that access that they've been craving, that institutions like, I don't care about the low guy. Like, I want to make my buck. This is what's changing that. Now they're getting access to the actual content, capital intelligence that institutions have been having for decades, as Michael can allude to. He's been around the block for a while, where they have the information and retail's just guessing. Those days are no longer. So like when we mentioned air, I love the rhetoric air. Like, we're providing air for retail. It's not just a word, it's access, insights, research. That's what we're providing, and I'm super excited to get to start this chapter of Futurum.
I mean, this is awesome, because this just means more content from you, Shay, which we all know and love. And Michael, I'm curious what you think about all this, because you came up in the institutional side of things, and things have changed very rapidly. And Shay and Daniel, they're getting the meetings that people who are catering to retail weren't getting in the past. What do you make of this trend?
One of the pleasures of watching technology over the last 30 years is how it democratizes every market. And you're right, my world, I was at Goldman Sachs for over 20 years. the ultimate institutional firm on the planet. And yeah, my whole life work was around institutions. But that was the mainframe era of investing. And today is the PC and smartphone era, democratization. And that's coming to financial services. And that's what Shay is talking about. Robinhood absolutely broke down the barrier in the context of the trading part, because I remember, I joined Goldman in 82 till 2003, 4. And, our whole world revolved around 5, 10, 15 cents a share. And now all of a sudden, it's extraordinary, for today's generation to even think of that. That's how I bought my first Porsche, because, you do 100,000, it was, no, but I'm just saying, that's, that was, by the way, 3 days before the crash of 87. I told my Porsche salesman, it was on a Friday night and the crash had happened on Monday. I took my delivery of my car and I said, this is probably going to be the last car you're going to sell in Manhattan for another year.
Savage.
And 6 months later, the Porsche dealership was gone. There were no Porsche dealerships in Manhattan for the next 2 or 3 years. It was that bad, that crash. Anyway.
I always say that to my Porsche salesman too. Always. This will be the last one you ever sell, buddy.
No, it's look, it's markets are markets and reality. And what Shay is talking about is exactly the democratization of investing. And research is one of the big next access points. We already seen this in the meme stock, what's been disparaged as the meme stock. It's just that individuals are now, very well-informed investors, whether they're trading short-term, mid-term, long-term. They have the same tools, access everything that institutions did. And now in a world where IPOs are scarce, the liquidity in the markets are very, very low, they have as much clout to move things as anybody. So anyway, I'm very excited, Shay. Congratulations. You're on to an exciting new journey.
Yeah. And Shay, I have a question I want to get in the headlines, but I'm curious, you have your pillars of themes you're into. Is this endeavor sticking with those pillars and kind of going deeper? Or are there new pockets of the economy that you and Daniel want to identify and explore?
I mean, it's all fourth industrial revolution. I think everything I've been doing the past couple of years, it's just me sticking my finger out in the air and seeing where the wind's blowing a bit. Now I'm essentially going to be talking to God, and God's going to tell me, the wind's going to go southeast, essentially. I'm going to be in the room now, hearing it from like the Lisas, the Jensens, like etc., like what they're actually saying. And then I can make my educated assumption on what they're telling me, rather than just reading channel checks, piecing all these pieces together to come up with a final puzzle. I don't really need to do that as much. Now I'm going to actually hear it from them, and it's going to be less assumptions and more intelligence. And that's like what's going to be exciting, where maybe I'm going to be bearish on software now. Who knows? Like, I think I'm bullish on software, but maybe I'm going to get some information of like, whoa, the AI tsunami is hitting software even harder than expected. Like, it's giving me more layers of information to make these assumptions I've been making. And that's going to make me look smarter, which is great. But that's why institutions just look smart. Like these analysts know, it's because it's a verbatim what they're hearing from someone else. They're not making really that great of assumptions. It's just an added layer to what someone else is saying. That's what I'm excited about, where I'm not going to stick my neck out as much because I'm going to have the facts now in front of me.
Very cool. I mean, exciting. There's been hints of your bearishness towards software lately, Shay. We talked about the moving to consumption model. Let's start with MongoDB, because this is a spicy headline with them, because they're in your doghouse and they just put up some numbers. I think it was the best they've reported in like 6 years or something. So can you quickly remind us what MongoDB does and give us a quick summary of what happened on their earnings call?
Yeah. So if you guys follow MongoDB, you guys know that or hear me talking about it, which is constantly, they're positioned perfectly into the agentic AI world we're about to enter, because they capitalize on the unstructured database, essentially, where it's images, content, like stuff like that. It's going to be rapidly changing. And Dev, their CEO, like, he's great, but he's so technical. He's a very technical CEO. He's not really a showman, and he's too technical to a fault where it's hard for the analysts, like on the calls, for example, to like, get a straight answer from him. And they've traditionally been the most annoying company that consistently beats the earnings, but guides down significantly on to same bad guidance to make their earnings beats look drastic. So I was like, I'm sick of that. I think this environment, you can't do that no longer. You'll be stuck in this long range. But for 3 years, like, Atlas is their AI consumption metric to track going forward. Like, that's what they do. That's what if they're capitalizing on AI agents or agentic AI, that's where the eyeball should go straight towards. 3 years, the revenue has slowed consistently. I was like, okay, I know that Amazon has an incredible competing product with what MongoDB is offering. Every engineer I talk to that uses Mongo doesn't like Mongo. So I was like, maybe I'm just wrong on this. And I'm seeing the numbers decelerate. Oh God, yesterday was the first earnings print in like 3 to 4 years. It reaccelerated. That was huge for me because AI agents is just getting started right now. I'm underwriting that Mongo is going to be one of the immediate beneficiaries off that thematic. If they're not showing any reacceleration, it's not a benefit for them. We got that yesterday. And if you look at their stock price, it's gone destroyed. And when a stock finally shows a reacceleration on an early sector growth theme with a ton of runway, a re-rating occurs. I do believe that Mongo is going to be going through that re-rating because Atlas grew 26%. I think that's really elite in this environment where Terraforce caused paralysis on enterprises. And that paralysis caused a slowdown in business spending. In that environment, Mongo just posted 26% year-over-year growth. And customer additions were the highest level in 6 years. Free cash flow doubled. Operating margins hit 16%. And even the CEO on the conference call, Dev, like he was the most bullish I've heard in quite some time. And he didn't say this verbatim, but fill in the blanks. Slowdown is over. He believes that the Atlas growth has bottomed at 26% and that's not cautious optimism. My headspace, it's in line in the sand. I do think that's the payoff of that multi-year strategy of doubling down on architecture, embedding the vector search directly into their core platform, acquiring Voyage, which was, I think, a great acquisition to own that retrieval layer, and going upstream rather than just focusing developers towards that mid-level enterprises who are constantly trying to modernize like their own self-serving flywheel. Like I do think this is a full stack play on AI and real-time data, smart retrieval, and I think like it's all in one system. And I do think this is going to go through re-rating. And I added yesterday at 215. It's on my DCA plan list now. I want a 4% position, but it's a great earnings to buck the narrative.
Adding is big. You were about to block them. You were done. You were like, I don't know, I might cut. Michael, well, I think Shay calls out something interesting, which is we've talked about, comes up a lot now, is these software earnings looking specifically at their AI products and the growth there. So if you have anything to layer on about MongoDB, but also wanted to ask you about DocuSign, which I feel like is like the punching bag of SaaS. But they report today too. The big thing everyone's looking for is their AI growth as well. So I'll give you the floor to you.
No, just on starting with Mongo, I agree with Shay on his assessment here. And I especially like founders and CEOs that are very bottom-up tech, nerdy, geek focused, which is the point I think you're making, that they're less concerned about hyping the stock from a quarter-to-quarter point of view and just look at it from a bottom-up perspective. And that to me is actually some of the most attractive stuff that I look for in these kinds of things. And so, yeah, there was a tonal shift here that is interesting. And obviously there is the macro headwind of AI and vector databases and unstructured data and AI and training and inference and all the la-di-da that we talk about. But the core thing, as you said, Shay, is just quarter-to-quarter execution, get the funnel in, start seeing the traction. Yeah, and so they seem to have surprised, and we've got to watch the trading action relative to float and liquidity and all of those factors, technical and financial, and then the fundamentals. So definitely worth paying more attention to, and I like how you're reassessing it.
Also, they announced an $800 million share purchase plan.
Well, that always
puts
helps.
Money where their mouth is, essentially, of like they think it's undervalued and the narrative is changing. And I was like, wow.
That's always a plus sign. So on DocuSign, look, I mean, this one has been kind of in the doghouse, a lot of issues for a very long time, especially, with everyone has been so focused on the shiny new AI toy and what does this thing do in that environment. So it's been a show me kind of a thing. There's a lot of questions of how they productize the AI components as AI and where they are even in terms of thinking from a context of first principles and AI native kind of work. So it still feels to me a work in progress. I don't know, Shay, if you have different views.
I think it's been a dead stock for 4 years, and they're in the uncomfortable middle of being too big to get acquired and too little of an ad value for that price tag of, I don't know, it's to be like 25 bill probably. Like who's going to pay 25 bill for a company who has
Yeah.
the product is a commodity. Like it's a low barrier of entry to create. There's no network effects at all through DocuSign. They are a dead, just zombie company. Maybe there's some new thematic in the future that they can capitalize on with the data they have in their ecosystem. They're them and Zoom. There's just no future for those companies. There's too big. Financial engineering. They're going to constantly do buybacks. They're profitable, but like they don't grow top line enough, and it's just going to be opportunity cost if you own this name.
I do. This the DocuSign conversation reminds me of something you've been writing about, Michael, which is this concept of AI hallucinations, because I do think the legal application of AI is interesting, but it's very not perfect and it's very risky. And AI hallucination is essentially, we've all had the experience where like sometimes they just make stuff up. Like I've been researching something and they're like, % of this is this. And I'm like, wait, is that true? And it's like, oh no, my bad. I'm like, wait, what? So tell us, you wrote about this. Tell us about AI hallucinations and like how that limits some of the potential of softwares like this that are trying to sort of replace that human layer, but it's really not perfect.
Yeah, hallucinations in AI is a very critical issue. And I wrote a post yesterday where I basically said, look, think about AI hallucinations as a forever problem. In other words, as we all just get used to using AI, whether it's in our businesses or consumer, just take it as a matter of fact that 25% of the results you get are not accurate. So you have to check it, regardless of what the companies, OpenAI, Anthropic, the biggest LLMs to the smallest enterprise SaaS companies, whatever they tell you they're doing to reduce hallucinations, you cannot believe it. Why? For here, you have to go back down into the secular way. AI technology is fundamentally different than 70 years of computing. 70 years of computing is it's ones and zeros and calculations precise. You can count it out to the 19,000th decimal place. AI does not work that way. It's probabilities on questions. Someone very smart 3-4 years ago talked about AI as stochastic parrots. These are statistical repetition machines. And what we're doing is putting ungodly amounts of Nvidia GPUs to work, and then they run extraordinary amount of matrix math, run these intelligence tokens and so on. But it's all probabilities. So you cannot trust that the actual answer is what you think you will get. So even when you buy OpenAI's product for $200 a month or Google's product for $250 a month, and tomorrow we'll be paying subscriptions of $2,000 a month, don't expect 100% accuracy. Why? Because of the nature of which these systems work. They're fundamentally incapable of reducing hallucinations, not because their researchers are stupid or technology can't be harnessed and so on. But for now, it's just the nature of the beast. So what does that mean? If you're using it as a consumer or as a business, make sure you have discipline to double, triple, quadruple check your results and then run it. So when you talk about it in the legal field, Harvey, all of these great startups in verticals in AI, they've learned that lesson and they're executing on it. When they work with their top clients, whether it's the law firms or the customers of the law firms, they make sure that they have both humans in the loop and then they have technology around with traditional hybrid approaches of computing to triple, quadruple check the results, that the citations in the court cases are actually real. And that is a friction point that you have to accept in the process, even though as a technology company, you'd rather not. You'd rather just take the result and run with it. But that's not the way AI works. And it's probably not going to be the way that's going to work for at least the next 3, probably 5+ years. Just the nature of the beast. We will have, I'll just say one more thing. We know about the godfathers of AI, the Hintons and the Benjios and so on. Jan LeCun is one of them. He's the head AI researcher at Facebook. And he literally, a few months ago, you should read his interviews and podcasts. He literally said LLMs are a dead end. He's at this point, because of this hallucination problem. He says, and he goes through technical reasons why of this that I kind of tried to summarize at a high level. But he said there are approaches to fix hallucinations, but they are in new directions that are not part of what the hundreds of billions of dollars are being spent for AI today. There will be next startups will focus on this. So it's a problem that needs to be solved. The solutions are still in the labs and research houses. It'll be here for a while. Hallucinations are an issue. So as we're talking about Shay for AI in enterprises and so on, this is a critical issue. This is what the big companies are absolutely realizing, that this is not a magic tool. Many CEOs have been convinced otherwise, that this is just something that we can replace a PhD with or a scientist over there. We're going to need more PhDs, more scientists for a lot longer to make this work. Just by the way, just like, Uber, Travis thought, we were going to get rid of drivers in the cars, 10 years ago. And today we need more drivers supervising or teleoperated drivers who are watching the Waymos and the other equivalent driving cars, because humans need to be the loop, because they will hallucinate. There will be long tail data recognition problems that will cause problems, and that's an issue. So hallucinations are here, a forever problem for now.
That's fascinating. I mean, Shay, you probably relate. I think everyone has that moment when you're doing research about something you actually know about. That's when you see the limitations. It's like you're like, wait a minute, like Shay, probably if you're looking up a company that like the back of your hand. It spits something like but you don't have that insight, that level of insight when it's an area you don't know. So I think it's a good, just as users, but also when you look at these businesses, how are they going to get around this? Because I mean, trust is so important with these software solutions.
Yeah, I mean, for me specifically, I can't use AI for facts at all. I use it for Grammarly, essentially. It's a Grammarly thing for me. Like, I hate grammar. I just like to put my content in writing, and it's like, make the grammar make sense. That's literally it. But the guardrails of AI, like, it's going to be here for a while, like what Michael was referencing. Like, it's not, the intelligence is going to get replaced across a lot of industries, but it's not going to be replacing headcounts as drastically and as efficiently, as quickly as people anticipate. Yes, I think inflated teams of 10 are going to turn to 6 or 7, but that 6 or 7 to 3 to 4, that distance will take a long time. I think from 10 to 6 very quickly, but 6 to 4, that's going to take a much longer time. And that's what I think Michael's referencing. And I do believe, though, like, what a comment that Michael mentioned, I don't know if it was last week or the prior episode, where Google was founded like 9 years after the .com era, essentially. I do think that that next layer of, like, all the solutions are now going towards LLMs, or expenses are going towards LLMs. That's not really solving the terminal solution. There's going to be, once they make that pivot away from the initial phase to the second phase of that, whatever the next derivative of AI will be, there's going to be a $1 trillion company that gets created during that process. That's what's exciting. And that's why it's so important to do your research now, learn the thematic and see how it progresses, because everyone thinks the Nvidias and Palantirs, the move already happened for the winners, disruptors. No, that's the first phase. There's multiple phases. There's going to be another Nvidia, another Palantir sometime next decade.
Yeah. I mean,
Shay,
go ahead. Go ahead, Michael.
No, just because you mentioned Grammarly, because that was literally the name I was thinking when we were talking DocuSign. Because here's a very relatively boring company, been around for 20 years. They just signed up to raise another $1 billion on a performance set of metrics. You should go back and look at it. They're taking traditional grammar checks and now starting to add AI components to it and growing their market, growing very slowly, just like DocuSign. And now all of a sudden they have a spurt opportunity. And that's why General Catalyst is going to put in a huge chunk of money on performance. They're not even getting direct equity thing, just as a kind of a rabbit hole if people are interested, just talking about how technology takes a long time to perfect, to apply, even to a field that is supposed to be in the wheelhouse of AI, which is grammar checks and summarization and so on. And then the last thing, Katie, to your point, we're talking about fact checking and accuracy from an AI, and hallucinations will be for a while. But what you were saying, where it comes up with new things, new ideas, that is the level 3, level 4 on OpenAI's map. It's in my post that I put up on the one I did a couple of days ago. And so right now we are going from chatbots, which is level 1, reasoning level 2, agents level 3, and that's basically occupying all of us for the next 2 or 3 years. But the ones after that are innovation. And that's where AI comes theoretically supposed to come up with new things. And that is even, tougher to do with today's LLM technologies for a whole bunch of reasons. Jan LeCun talks about this, because today's AIs are basically hoovering everything that humans know and have put online and is running stochastic matrix math on that. There's not enough stuff there for them to come up with innovative new ideas. The only place where we're seeing some of the glimpses of new innovation potentially is things like AlphaGo, DeepMind's things on the healthcare side, because they've orchestrated that specifically for the new innovation stuff. So that's to come. And that's another place where I mention all this because especially CEOs and CIOs, when they're investing billions of dollars of their IT budgets, sometimes they get ahead of themselves on their expectations that the AI is going to do all these amazing things, that they will need less of human people to do their work, and they'll be able to rely on these technologies to do what humans do today. And I think it's going to take a lot longer.
I love geeking out on these topics. And I know, guys, we kind of started a debate last time Michael was here around Apple. And I want to go back to that. I feel like everyone likes some conflict. I know you guys will keep it classy. But you seem to be on two different ends of this Apple debate. Shay, you've been dogging them for a bit. Michael, you casually, in addition to
Team Apple.
Owning more than one Porsche, you casually dropped knowing Tim Cook meeting. So you've been around this company. Let's do a little debate. I think for each of you, let's do a 20-30 second, what is your take? And then we'll do point counterpoint. You guys can fight it out.
Should the Grinch start or should the legend start?
No legend here. I'm just a passerby on this story.
My bear case is clearly not today's reality. I just think it's where the world's heading towards. I think that where we're heading to is not apps anymore. It's AI agents. We're not going to be tapping screens. We're going to be talking and sensing. We're not going to be using phones. We're going to be using devices that use our data to help us automatically do everything intelligence-wise. And that's a problem for Apple because they're still building for the old model. Yes, they changed the world by putting the internet in your pocket. But now that interface, a screen full of apps, is starting to feel outdated. And you heard that Jony Ive's acquisition from OpenAI is the catalyst for that acceleration, because next big shift in tech isn't about faster phones. It's about smarter devices that talk to you, understand you, and act without you even touching them. That's the big transformation. Think of it like this. In 2007, Apple killed the keyboard phone via BlackBerry with glass. I do think that today's reality in the next couple of years, OpenAI wants to kill the app phone with an agent, something that doesn't need icons, needs or touchscreens. And if they succeed, it doesn't just hurt Apple's sales. I do think it disrupts their entire ecosystem because it makes it feel like it's a pass where Apple's trying to optimize the App Store. OpenAI is trying to replace it. But again, Apple should be able to capitalize on consumer AI. I just haven't seen evidence of that. But popping it off to you now, Michael.
All right, gloves coming off.
No, we're actually on this in the same foxhole. It's just that the foxhole is a few feet wide, so we're seeing different parts of the battlefield. So what you're saying in terms of apps, the app layer and above for Apple, above the glass, is a good point, because that's what we look. The last 3 years since ChatGPT in November 30, 2022, that was the ChatGPT moment. Our world is all about typing into this thing and getting answers and this whole business. That's why we've got 500 to 1 billion monthly users of AI. But that is mainframe type of AI access. The AI access that I'm excited about, that you're excited about, Shay, is the stuff that is going to happen off our devices. And right now, the world, because we've seen voice AI through Scarlett Johansson sounding her voice interaction, we think it's all voice. I think voice by itself is a cul-de-sac. Jony Ive has hinted at that. He's basically, if you listen, I did a separate podcast on Sam Altman focused on voice and GUIs, graphical user interfaces, working together. When you think about all of those kinds of things, you really have to, and Apple only gets credit right now for everything that's above the App Store. Okay. What Apple has done 6-7 years ago is they leveraged ARM computer, which it saved Masayoshi Son's butt at SoftBank, because he was about to, after WeWork was about to go down the tubes. But ARM, the IPO where he sold 10%, ended up being a $150 billion bet. A lot of ARM's designs were basically building Apple silicon. Apple is the single most interesting chip company for 6-7 years. They created their own Apple silicon. Now, if you go into the weeds of that, I won't get too nerdy here, sorry. But I just want to point out that to run AI, you need to transition from CPUs, central processing units, to tons of GPUs. That's what we're doing in the cloud. That's the hundreds of billions of dollars on Stargate and all that stuff. But Apple started to put GPUs on their chips, in their phones, in their watches, in their AirPods 4 or 5 years ago. That gave them the ability to have these devices, these things run 10, 12 hours, 15 hours. Microsoft with ARM is just catching up with Qualcomm, with laptop PCs with ARM architecture. And the GPUs, and there are different words, NPUs, neural processing units. All this buzzword stuff is important because that's what's running the teeny tiny hundreds of language models that are going to go in here, that are going to take our data and then create all these amazing AI magic type of answers, whether it's through voice or GUIs or devices. Apple is the single company on planet Earth serving 8 billion people with 2 billion devices that has the total control of every type of device known to humankind: laptops, desktops, computers, smartphones, wearables, watches. This thing is bigger than any watch platform on the planet today, the Apple Watch. And all of that runs under a substrate of Apple silicon across all that stuff, with GPUs across the stuff, and then tons of individual operating systems that are all similar at the base, at the kernel level, that can be leveraged by millions of developers writing for all this. All this geeky stuff is important because the apps, the magical AI apps that we are thinking about, that Johnny Ives is thinking about, have yet to be built, yet to be invented. It's just like we talked about internet, the Netscape moment, like the ChatGPT moment, was in the fall of 95 when Netscape went public. The world said internet's coming. Google didn't get founded till 1998. Two guys and at Stanford, and they didn't get funded with their first check until a few months later. They didn't go public till 2004. That's why I said 9 years after the internet started to when Google went public. And what I'm trying to say is that Apple, whether it's companies building on Apple's platform or Apple itself, they own the platform. So they have as much as a shot as a piece of the economics of the AI world to come, with billions of app agents and applications being run for people, is yet to come. Has a better shot of being built on Apple's platforms than on Google's Android platform, which is very fragmented. Google doesn't control anything more than 5% of its Android platform. Most of it is in China. None of those Android phones in China run any Google apps or services. And that's where what I'm excited about for Apple. And that is where I think people are underestimating Apple, and that Apple is behind the AI race. I think the race is getting started. Thank you.
So Shay, like at that platform point, Shay, you think someone else could take that spot as the platform layer, and it doesn't need to be Apple? Or
so Michael brings up a good point. So the good point is being. I'm trying to frame it in a way where Apple owns the full stack. Like that's a pretty big driver for them, where I think that if like they own the full stack, where they own the silicon, the operating system, services, distribution, that's all owned internally. I do think that privacy is their major differentiation to potential competitors going forward. Like for OpenAI, like, you think the consumers are going to trust Sam Altman with owning all their information? No, not at all. So like Apple does own the relationship with the end user without having to sell the data upstream, which is huge. And I do think privacy is going to be a major component of that going forward. And like you mentioned, the iOS powers 2 billion active devices. Who has that? Who in the world will ever have that kind of scale? Like it's not a mode. That's like, it's a nation state if you think about it, like 2 billion devices. Like Apple has that hardware scale, and they have that chip they have that chip advantage as well, with like the M series, the neural engine, like, and the App Store distribution to adapt on its own terms. Like everyone's chokehold to that 30% fee that Apple has on the App Store. So like they should not be losing this game. It's just I haven't seen their ability to capitalize on these early secular growth themes in a way I would want. Like, I think Vision Pro, I think Michael can attest this as well, was a total bust. I think the Apple Car, it was a dud. They waved the white flag already on the Apple Car. And these are expensive ventures. Like, these aren't just like one-offs of like, the reason they're expensive is because opportunity costs. They used a lot of soldiers towards these specific thematics that didn't come through. And I think that Apple Intelligence is kind of feeling more like a defensive patch than an actual moat builder right now. Meanwhile, you're seeing like Google, Meta, Microsoft, they're all reshaping user behavior around their AI native interfaces, where if Apple doesn't break out of its hardware first thinking, which you have to do in this future world about to enter in agentic AI, that's where I'm like, they need to do something to capitalize on agentic computing, which I think they have all the pieces on the board, and they're not idiots. And they do things behind the scenes where they don't reveal it until it's done. But I just haven't. I'm not confident in their last couple of years of innovation, and I'm worried that they're just thinking hardware rather than the agentic computing world.
Michael's bursting at the seams. To
Shy.
make a point. I have to jump
Sorry.
in. It's
Thank you.
getting hard
Shy.
to watch.
Hardware is everything. Shy, I would beg you one thing. Do not separate hardware and software. In the world we're going, they both need to work together. Your former guest talked about,
Right.
his acquisition was Mellanox, etc. The hardware and software, that's what's creating the systems advantage going forward. That is NVIDIA's story. If you think about NVIDIA as just a chip company, you wouldn't be in the stock.
I meant hardware as phones, just phones, not the chip.
I understand. Yeah. But what I'm trying to get at is the privacy is a very important piece, is hardware is fundamentally what is going to enable anything we want to do on the software side. And control of that stack is the key thing. Zuckerberg beat the world with smart glasses. These are his Meta smart glasses. He sold, despite all odds, $400, 2 million of these things. Okay, these are the worst consumer product that has ever been invented. Hate them. Okay, I love the fact that I can take camera and etc. But every time I use this damn thing, I have to check my Facebook account because I'm afraid Zuckerberg because he's so good at monetizing it, has taken all my photos and already sold ads against them on Facebook because it's downloaded. I don't trust him. I don't trust it because Facebook,
cool.
and I'm a shareholder. I love Meta. Meta is the single most ruthless mercenary company to monetize the next technology. So he made $10 billion in revenues with AI before TikTok, okay? Because he used AI tools to do this. And the point I'm getting at is he's got the hardware, but he doesn't have the software platform. And he is, if you Google it, he is frustrated against Apple because he doesn't have direct access to the stack in here through these glasses. And that's his problem. Google has, and OpenAI has the same problem. That's why they spend $6.5 billion to buy Johnny Ive, 50, 60 guys to create this platform. And their hope is to sell it to Apple, is my bet in 3 years.
I know we're at the top of the hour, but do you think there's a world where everyone is just so frustrated with Apple that they're going to help OpenAI accelerate a competing product to open source?
Conduit. Here's the problem. Hardware is hard. I'm sorry, the stupid pun. it takes. I've invested. I was a co-founder in a hardware thing. It takes 3 years to get the sample things back for the chip. It's 5 to 10 years. So every time hardware is extraordinarily crazy. And in the world of tariffs that we have today with the rejiggling of supply chains, forget about it. You're 100 million from OpenAI, Johnny Ive. I love those guys. It ain't going to happen, especially under the current tariffs. 10%, even if we settle on 10%, I will put a bet down. The best bottle of wine you want. You will not get hardware. So the entities that have integrated hardware, they deserve a premium, not a stock recommendation to their multiples. Because now against that, you can say, oh, Apple is asleep at the switch. They don't know what they're doing. They're not paying attention. Apple Intelligence. But all I'm saying is we're judging them by the AI of today, by which I mean AI of yesterday. The AI we're using, the chat GPTs, they say, this is mainframe AI. We need centralized monstrosities of data centers that are multiple football fields to serve AI. In hindsight, this is going to be the silliest way we did AI to generate intelligence tokens. But we had no other way. We had to do it. It's just like if you wanted computing in the 60s, you had to buy IBM mainframes. If we want AI computing going forward, it's going to be on these phones. The GPUs and CPUs, the hardware that's in here, is what's going to make it happen. And there's no one. OpenAI doesn't have it. Google doesn't have it. Meta certainly doesn't have it. They have these glasses. That's it. And by the way, the thing that you talked about, Vision Pro, they're sitting right over there. I love those things. It was never meant to be a consumer product, Shy. It was just a concept demo. They sold it for $3,500 for idiots like me who bought two. Because I love playing with them. I get to live in the future for 3-4 years because I know that $3,500 thing is going to be $350 for my nephew and nieces, in about 5 years, and I'll be giving them away as Christmas gifts. But what I'm trying to get at is that the technology always comes down. But in there are amazing ideas, software and hardware, in terms of how you interact with the world, voice, GUIs, AI. These are sandboxes for innovation. And by the way, everyone says Apple Vision Pro was a dud. Guess what? Samsung and Google partnered to create the Google XR glasses. Now you can see it on my post. They're exact copies, a little bit better because they're a year later, lighter. They haven't announced price. It'll still be $2,000-$3,000 because the equipment is expensive. Meta, Zuckerberg, showed amazing smart glasses with amazing technology in the lenses here. But the lenses were made of diamonds. If we can do the technology today, I can show you the detail. You will just go, and hundreds of people there, all the YouTube demos are there, went nuts on the smart glasses. But the problem is to make those smart glasses happen today, you would need to sell them for $20,000. Meta spends $20,000-$30,000 per unit to do the demos. It's just that the hardware is expensive. It's going to come down in price. Until we get all that stuff, it's not going to be the AI that we're dreaming about. Apple is in a pole position to do this technology. So that's why I don't think they're out of the race. The race has not even begun. And so I would just urge everyone to be patient. And the big challenge is Apple's management needs to be more proactive. I agree. We can have another debate where I could absolutely say Apple should have done this, Apple should do this, and those are the challenges. And those are management execution issues. But in terms of companies out there on the playing field for AI, Apple has as much of an opportunity as anybody. So I would not rule them out.
Well, one last question. I know we're way over. What are the chances that Apple acquires OpenAI, Sam becomes CEO of Apple?
I would say over 50% potentially.
That's a strong number.
Because Apple will need to probably buy an LLM, the leading LLM company. And in the US, it's OpenAI and Anthropic. My favorite acquisition for them would be actually for them to cut a deal with Shay. There's a wonderful book called Apple in China that everyone should read about the history of Apple. We can talk about it. I've done a lot of work on it. But Apple really should buy part of or all of DeepSeek. Open source software, it costs them far less.
What's the likelihood that gets allowed?
Look, she and Trump just talked, and all the markets I understand are up. Because the tariffs are going to go to reset. The U.S.-China issue is politicized today with tariffs and so on. The reason after Nagasaki and Hiroshima we never had any nuclear explosions on the planet is because first the US and the Soviet Union, then US, Soviet Union, China, then the US, Soviet Union, India, Pakistan, and then US, Soviet Union, India, Pakistan, and North Korea, and a couple other countries, Israel and others. We all decided for 70 plus years, MAD, mutual assured destruction. We live in a world that is for technology, for all the things we're dreaming about. We need the hardware, software. We are tied into a world of mutually assured dependence. We cannot build the robots. We cannot build the glasses. We cannot build the iPhones. We cannot build the iPads we want without the supply chains as they exist in China and Asia, etc. We can try to bring it to the US. We've talked about it. It won't happen for 10 years. Why? Because it takes a long time and hundreds of billions and trillions of investment. It will just not happen. So we are tied to each other. So to your question about Apple, yeah, there's a good chance they could buy OpenAI in 3 years because it'll accelerate them in AI large language models, and that would be a very good thing. Sam running OpenAI, running Apple, I would not bet against it because Sam is one of the most extraordinary people I've seen raising capital and convincing other people of his vision. Sure, he has a shot at it. It's the way they orchestrated the Johnny Ive Sam Altman friendship on that 9-minute video, it tells you what they're thinking. And this is where it's kind of being hinted at. And there's no financial metrics I can point to say this is what's going to happen. Mm-hmm. But, love is in the air.
Well, we will see about that. Guys, great stuff. We got to continue. We got to continue the debate series, I think. We got to make this a thing. Michael, you're getting heated. I love it. This is what we need. First thing in the morning. Guys, thank you so much as always. Everyone, we'll be back on Monday.
Thank you, Katie. Thank you, Shay.
Talk more. And hope everyone has a lovely Friday and a great weekend. And we'll see you next time around.
Congratulations again, Shay.
Oh, thank you.